journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good, Louis. I want to tell you a little story today. I'm going to tell you two of them exactly. This is the silver on a 4-hour chart going over the last 5 days. This morning I was speaking with a young man that I've been working with for a couple of years. I met him in 2008 when Sarah and I were on our honeymoon back there in London. We were in Italy and spent 6 weeks over there, and I met him at a Tom Hugard seminar. He started working with me, but he pointed this out to me this morning that we were making a 20-man line, which he follows these quite a bit, which they're very, very good. Basically, what Jim's 20-man said is this acts as a fulcrum, that it will pop up to this level. We were talking about it when it was right here. This was about 3 or 4 hours ago before the market opened. In fact, it was just about the time that the New York Stock Exchange was opening that this was getting ready to happen. And he pointed out to me that it was setting exactly at the 382 retracement, almost within a penny of that down here at 27.88. The 382 was the 27.87 was the 382. The low was 27.83. So it went 4 cents lower. And right after I was done talking to him, Byron Tucker called me and he said, "What do you think about silver?" And I said, "Look, it's going to have a lot of support around here in 27.85 area. And it looks like a pretty good move." Well, that was $3,500 later, folks. You can see it had the big move here to the upside. So that's really makes me feel well, that feel good, I guess, that people do follow some of these things that I'm talking about. Let's look at silver since we're here right now, because we should have made an ABCD pattern on this. I believe there's your AB leg right here. And there's your CD leg. It looks like it's going to get up here to the 1.618, up another 18 cents. By the way, we switched over to a Christmas silver now, folks. Let me get this up here. You want to see something that makes me quite happy is when you see this AI work like it did today. This was a pretty nice move here in this, but I'm watching three things because this is held really well here. This is a really important thing, folks, on the AI, the fact that we held right there at that bottom. You can see that. There it is, right at the bottom. That means we're going to get a pretty good rally out of this. So we'll watch it, quite a bit in here. Right now it's not doing too much, but going below this, folks, this is where you go below this. It's lights out. I mean, really lights out. Big time lights out. If we close below that, 54.32 was the old low. We closed below that. We're 12 handles, 18 handles above it. So if we can do that, then it'll be a pretty good move. Here is what I would be watching. Okay. All right. Now let's get back to the December silver. This is one of my favorite stories. Okay. I see if I can get a monthly. Oh, I don't think it'll go back far enough. No, it won't go back far enough. I don't believe. It won't go back that far. Maybe it will. Hey, it does. Oh, no, it doesn't go back. But in 1980, silver topped and gold topped on the same day, which was January the 20th. Okay, January 20th was a day that it topped. And now December gold. This was in January. Now December gold, which is out, 11 months out, was trading at over $1,000 an ounce. Spot gold was $865. December gold was $1,000 an ounce, and I thought the top came in on January 8th at what was it, $698 or something, just under $700. It went up to $865. But my story here is on that day of January 20th, early in the morning, all of the options were up the limit, $50 limit, and spot gold was trading $63 higher, $13 higher than the limit. And I called, I had some, intraday stuff that I was looking at, and I called up Richie, we were trading through Goldberg Brothers at Drexel. They also had Nelson and Lamar Hunt's accounts there. Mine was a little tiny. Well, we had quite a few people, but mine was small. Anyway, this is where we were trading, was up around $1,000 an ounce, and everything was locked up, limit up, with the exception of the December contract, was trading off limit by $2. And so I told him to sell me a December gold at the market. And he said, Larry, he says, you're one of our best customers. Please don't do it. And I said, Richie, how long have you been down there? He said, well, my brothers have been down here for 15 years. I've been down here 6 months. I said, Richie, sell me 2. And he said something like, SA, I will, SA, but good luck. Anyway, I got filled $1 from a high. Okay, and he called back just about 2 minutes later, just handed the order into the pit, called back 2 minutes later. And I'll say, okay, now what I want you to do, Richie, I want you to put an order in to buy to $100 lower, which we limit up to limit down. And he said, Larry, they're not going to take that order. And I said, they have to take it because I'm giving it to you. He says, man, you're off the rails here, man. He said, you're our best customer. I hate to see you do this, but you're a big boy, so you know what you're doing. So he put the order in to cover it down in here somewhere. It was a $100 move in gold from the high to the low that day. And folks, 20 minutes later, I'm not kidding you, 20 minutes later, maybe a little bit longer. Well, it's probably 2 hours. I can't remember that back far. But anyway, I got filled. I made 20 grand on a day trade. And that's what happened that day. So that was the 20th of January, 1980. Folks, gold didn't bottom until Tom O'Brien said it was going to bottom, which was in 2002, I believe, at $256 an ounce. It went down for 21 years, boys and girls. 21 years it was in a bear market. So be really careful when you're watching some of these things, because it's very, very exciting when you see this stuff unfold the way that it's doing here right now. Okay, now we got that out of the way here. How are we doing with the time? We want to be watching this. Watch this S&P closely, folks. This is really super. Well, in my opinion, if you're not in a position, then you don't have to worry too much about it. But here's where we are so far. I'm going to be watching that. The key here now is shucks. The fact, let's just look at it technically, because this is a timing thing that doesn't work all the time, but it works part of the time. There's our range for today. There was the first high that came in right up here. Okay, now that didn't take out the high. The high we were looking for was 55.40. We never even got close to that. We made it in the NASDAQ. We made it in the Russell. We made it in the Dow Jones. It went to the 786, but this one hasn't. All we're doing now is having a little tiny bounce. There's other little tiny bounces in here too. See, so the first one right here, we're up about 15 points. But if we go below this low, boys and girls, and we close below 54.30, then we're 20 points away. That's not going to be a good sign. Okay, so let's remind ourselves, hey, this is my opinion, of course, and that's the way it is, and I'm sticking to it. Let's take a look at a couple of these other trades that we have going on here. We'll be right back. 877-927-6648.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, here's the soybean oil we've been in, folks. We bought this just below 4,100 here on Monday. It had a pretty good rally. Today it backed off a little bit. Now it's back to almost where it was before. And it has been the leader of the pack. So if it can get above this level right here, and there it is, facing right to 382 again, right up here at 42.22, that's going to tell you you're going to have at least an A, B, C, D rally up here and potentially a big move higher, folks. This is another one that brings back a lot of memories because I've told this story many times. This was the one that was really important to me back in 1975. All right, let's get back and take a look at a couple other things that I wanted to be watching here today. We're watching the gold. I wanted to watch crude oil because I sent a special email out. Let me get this. This is the forecast for today. Just had a little bit of a rally here, but if you remember, we were looking to buy this down here at this level right here at 75.50. This morning when I sent this up, it said it looked like we were going to be coming down. We were trading right about here. And I said, if you can get out of this at your break-even point, which was just really close. Some people did, some people didn't, but I said, don't risk more than $100. So it's either break-even or $100, but we've broken down pretty hard here because this market continues to go lower. And that means that we're probably going to go a lot lower. And just looking at this on just over the last few days, this is the range that we've been having. This was the high to last night. It was one of the things that scared me to death. From this high down to this low, we couldn't even make a 382 retracement. We missed it by, that was telling you that it was pretty bad. And then this morning, that this is where it looked like we're going to go lower. This looks like we're heading lower, folks. There's no other way to look at it. Now, I've had a request to look at the RBOB because that's been a pretty active one here. And there's where we are here. Good. That's the Dow Jones, the S&P still rallying, 57. That's up 20 points. That's really good. Hold on here. Get the the RBOB up, and we'll be just fine. Just give me 1 second here. RBOB is right there, and it should be coming down even more. Wow, it's just there's just no handling these things. So there you see it just keeps dropping. We'll get it on the daily here because it looked like it was going to have some support here, but this was another reason why we brought it to your attention here. The fact that we were trading right about there, and I said, look, this looks like it's going to break and at least get down to here. So we're below the 78% level. We're below the ABCD to the downside. This thing doesn't have any friends, folks. So let's remind ourselves of what we're watching there, okay? I think it's important to pay attention to it, but that's the main thing. The main thing to watch, folks, for the rest of the day, no matter how long it takes, especially here, you can see it hasn't rallied very much. So far, we've rallied from 34 to 55, 20 points. Usually, the rallies will not be more than about 20 points, but we always have the 382 to rely on here. So if we take this and mark the 38, whoa, let's get it up there where everyone can see it, Larry. There's the AB, the 382 comes in. That's up quite a bit yet. Whoa, that's up at 71. Whew. That would be one heck of a rally, wouldn't it? Well, we're going to see. That might do it. So anyway, we're still having a nice little bounce in here. But going below here, I've got to put this limit minder in because going below here makes this daily chart or this 4-hour chart look awfully ominous. Now, it could hold because we've held here before. You see how I've taken out the lows here by a point and didn't? So it could easily hold here. It certainly could. So that's another one to watch. We should look at the NASDAQ because that has been the leader of the pack, and it's also led all the way down. And here's the NASDAQ. Get the hourly up on the NASDAQ. Oh, dear. Oh, dear. That's really big. The NASDAQ has already taken it out. Look at that. Ooh, but it's bounced pretty good. We've already bounced almost 100 handles off the bottom. So that could be this could be a really interesting one, folks. But wow, boy, that's why. Wow, didn't see that. This is I wish I'd have seen that ahead of time. Anyway, that's what not because I'm in anything, but I'm just saying that might have been something really interesting to look at here. Okay, so we did take that low out, and we took it out by quite a bit. So if we can reverse from here, we got a chance for a really substantial rally for the rest of the day. And as you can see, you're already starting to see it here on this. But the key is how long is it going to last? And remember, our thing that we want to look for, as you can see, it's following up. Now, all this is, folks, this is just repeating what happened 2 days ago. This was Tuesday. You go back to see what happened on Friday, and it made a low probably right at low or high, probably around 11 o'clock. So let's just do that right now. Just come up here, and we'll get out the 15-minute chart. We want to go to Friday. And Friday, there's Sunday, and here's Friday. We want to go to about 11 o'clock. And there was a low right there at 11 o'clock. The low is between 10:45. There. Look at that. There was the exact low right there, and look where it took off to. What this thing does is it goes back, and it realized that the stock market, just about all markets, skip a beat. In other words, what they do on Monday, they don't do the same thing on Tuesday, but they do the same thing on Wednesday, and that's why that's an important thing to pay close attention to. Okay. So there's what we're watching. So just move this over a little bit. Not 15 minutes. The 15 minute has nothing to do with this. That's just because it's on there. But remember, start going below here. It's trouble in River City for a lot of things, and we're starting to see things, implode on some of these things, which is a little bit scary here. Okay, now let's move on here, and we want to take a look at the soybean oil is doing okay. Corn, still, they're beating corn to death. It just doesn't want to go up very much. One that I was watching today, I didn't get a chance to do anything because I was doing so many other things, was the wheat market, because I thought it had a chance of a little rally. Let me see. I had this on the limit minder to watch, and then I got busy and didn't do it. Let's see what we had here. Whoa, it did have a rally, son of a gun. They rallied from 17, it's only 10 cents, but that's $500. But down in here, your risk is only $250. So the payoff was pretty much 2 to 1. And that's what you like to see when you're trading some of these things. Remember, Shane Smolian will be our guest today. Tomorrow, I believe we have the Harley Man. Stan Harley is up. And then on Friday, if Peter Elides is back from his vacation, we're going to have Peter on for the end of Well, that'll be the that'll be the second day of August already. Are you kidding me? Where has this year gone, for heaven's sakes? Okay, let's pay attention to what else. Oh, Apple. Somebody's asking about Apple. Hold on. I should have remembered that. Here's Apple right now. Remember, we had a bearish idea on Apple, and it still hasn't done anything. It's still going down. And I'll tell you another one that doesn't look very good, folks. Here's Microsoft. Softy came out with really bunker earnings or whatever it was, and it was supposed to be really strong, and not so good. You see that? It didn't do anything. This was strong earnings day, and it's down $12 from a strong earnings day. Let's see if this old 382 stuff. Put your placard down, Johnny. Everybody's tired of watching it, but we love you for it. Hold on right here. There was your 382 right there. Hit it 1, 2, 3, almost 4 times, and then boom, down. Really good thing to watch if you're trading short term, long term, medium term, any term. 877-927-6648. Stay tuned for the Shane Man, the Wolf Trader.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and I believe we have Shane Smolian, the wolftrader.com, in the house.
Is this Duke and Duke?
100 South Broad Street, Philadelphia, Pennsylvania. That's where the bank was, where he went into, if you remember, we went in the first time where the partnerships desks were. That desk was right up on the second floor. Anyway, please, nobody wants to hear that. They want to hear what's going to happen next. And you told us yesterday we had a geometric storm coming that should bring on some weakness. And let me see, the S&P is down 48 and the NASDAQ is down 300. That would be weakness, right?
Absolutely. And I think this is
very good.
I think this storm's going to stay with us for a few days. We have about 3 days of this passing over Earth, and across time, the average value of these does tend to be negative on the market. So we are going to start out with S&P first today, and we'll cover all these topics. I'll cover a wide variety of topics here, but I'm just going to give you a little bit of a summary here. So the Fed use 3.0. This is a system that we use to track Fed activity in the market. So I believe this has been repaired. I updated the neural network. The Fed has changed what they were doing last December to now. So I believe I've repaired this. It reflects the latest Fed operations, and we were able to double the bandwidth on the optimization, which is important. So I can see more information now from the Fed. And so this system now cannot invert, and we've been doing pretty well with it. I mean, this has been in a cell. So this Fed use has been in a cell since the middle of July 16th. And so far, I think it's tracking this pretty well. And this is a broader term signal. I'm going to show you guys this in a minute, but this is really meant to be the backbone of this service. It needs to provide the leadership to us to give us a central focus to look at. I mean, we have a lot of other systems, but this is really meant to be the central focus. So this is in a cell, and it looks like it's still in a pretty deep cell heading into the Fed meeting tomorrow. We have the polar R-squares too. This continues to track well. We're short on that today on S&P, so we kind of got like a double short today, which was good because the storm was moving across, and this system is doing well. It's in a blue sky breakout right now to all-time highs. So tomorrow we have this Fed meeting, and so a lot of people are not expecting a cut tomorrow, so probably not. There's not going to be the next meetings we're going to be looking at is September. It is expected that the language will change tomorrow to more dovish tones, or the dot plot might change to have an expected cut possibly in September. So I don't expect them to cut tomorrow, but the market tends to get volatile around the Fed meeting. We just tend to have this storm right now across the meeting, which is kind of casting a negative effect. So there's a series of storms moving across Earth right now, and there was supposed to be a G3 today. We're still waiting to see if that comes. I've been tracking. So far, we haven't seen those conditions yet, but it's supposed to come. In the next couple of days, we're supposed to have a series of these storms. So usually when you have 2 or 3 days of this, it does tend to have a negative effect on the markets. And Larry, as you remember, it was the Federal Reserve that wrote this paper on the geomagnetic storms. So it's kind of an odd source, but the Federal Reserve of Atlanta wrote this paper about the storms, and so this is where we get a lot of our data from. The last point I'm going to talk about here, which we will get into, is that August and September since 2012 tend to be historically the weakest months of the year for the S&P. So we are moving into a period here which is historically weak, and I think August has a lot to do with the fact that there's no Fed activity going on with terms of the meetings. So we do have conditions here that could be signaling some type of a medium-term pullback. But of course, we do have the election coming up, and that does tend to be bullish right into the election. But let's talk about these storms real quick. This is the average value of these geomagnetic storms. And so you can see we're right here in July, which tends to be the low. But that doesn't mean that we can't get storms. They can come. It's just their frequency is less. We are getting a storm coming across right now, and then it will pick up into August, September, October. And like I said, the 2 weakest months since 2012 are August and September. So that correlates with these storms. And then October is the peak month. And of course, that's when we've seen a lot of these historical market crashes. October tends to be, in general, a bad month. But in the last 12 years or so, it has not been. The 2 worst months have been these two right here, August and September. So that's just kind of the background in terms of the storms. I mean, this is the actual forecast. There's supposed to be a G3 conditions passing over like now, but we're not really seeing it yet. But that doesn't mean it won't happen. Sometimes these storms get a little bit, they're not as precise as like a weather forecast of a hurricane or something like that. So we have a G3 supposed to be coming today, and then tomorrow another G2, or tonight G2, and then again on the 1st we're supposed to have another G2. So usually when we see a series of these pass, it does tend to have an effect. It's somewhat of a depressing effect. Usually the Russell and the small caps get hit hardest, but the Russell, as you've been pointing out on your show, has been relatively strong in the last few weeks because there's been some rotation into the Russell. So that's kind of where we are in terms of the storms. Now I'm going to show you this picture here. This is the monthly historical patterns of the S&P since 2012. This is just a very simple system that I wrote that just tracks the statistical nature of each month. And so I start up here. This is January, February, March, April, May, June, July. And then you can see here, July is typically supposed to be a strong month, 78%. But then when you get down into August and September, you can see it drops to 46% and then 42% in September. I particularly like to look at the recent period since 2012, the last 10 or 12 years, because this is really when the modern era of the Fed has begun. So I think this is really important to kind of zoom in on these historical values across that period. And so it does suggest that we will have a few soft months here. Now, this does not predict the depth of the selling and the depth of the decline. That's a different chart. But it does suggest that on a percentage-wise, we're coming into two of the softest months of the year. So that I just thought that was kind of interesting to give a broad-based perspective in terms of the storms, and then a broad-based perspective in terms of the S&P. So historically, this is a soft patch we're coming into here. So the next chart I'm going to show you here is going to be the Fed juice here. Now there's a few indicators on here. Let me just clarify what we have here. These red arrows here on the chart are the Fed juice here, and you can see the Fed juice here does go into this sell on 7/16. And it previously had gone into a buy on 7/8. We had repaired this at the beginning of July, so it has picked this turn up pretty good. This actually coincided with the quad lunar cycle on the 16th. So a lot of times when you get a double signal like that, it tends to be, sometimes you need to really pay attention to it when they both show up on the same day. So we've been short on this. This is the swing trade since 7/16. We had reverse long on this earlier in July, but we're short now. And it's still continuing to be in this pretty strong sell pattern. The planetary speed index is also in a sell on 7/22, and the BAT model, which is a trending model, is in a sell. The only thing that went into a buy is the quad lunar cycle. So 3 out of 4 still down. What I'm primarily tracking is the Fed juice here, which we'll talk about when we get back.
Okay, we'll be right back with thewolftrader.com, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Mr. Wolf Trader himself, the Shane Man. Please continue, my friend.
Sure, Larry. Okay, so I want to show you a zoom chart of the Fed juice, and one of the reasons I really like this indicator is because it's relatively stable. It doesn't whip around a lot, and you can really see that this is still pretty much in a very strong deep sell. So, like I said, this is our primary swing trade indicator, and so we're really just kind of tracking this. I always just tell people, let's just follow what the Fed is doing. So I don't see this turning right now. I mean, it doesn't show any signs of turning up. So we're just going to continue to follow this to the downside. We do have a series of running stops on this. And one of the things that we do on this is meant to be a continuous signal, but we have these running stops to prevent spikes within the day. And the running stops, essentially, they track this system and then it basically gets you out if there's a big dip, because the S&P, it doesn't tend to come back. I mean, this is a graph of the stops on it. So typically you can see as you get out here, these are the wider the stops out here, you can see that the profit actually declines. So these running stops, when they get hit, when the S&P gets hit, like let's say tomorrow there's a positive Fed report, or let's say the Fed cuts rates tomorrow, right? If we're short on this thing, what will happen is it will just stop out early, and then the market tends to keep going. So the S&P tends to behave like that, and so these go hand in hand with this Fed juice. Now I want to get into NVIDIA because a lot of people have been asking me about this. I've tried to include more NVIDIA charts. NVIDIA is actually at a cycle high right now. I have this. This is from Alfie's program, Alfie Lavoie, and he has a composite cycle on there. This is like 583 astro cycles. It's you can see over here on the right side, these are the transits, but this shows an actual cycle peak today. So it does suggest that NVIDIA should be seeing some more downside pressure here in the coming days. And astrologically in August is a really heavy month. We start out with, Larry, one of your favorite transits, which is the Venus square Uranus transit. That's going to happen on the 2nd, because I know you always ask me about that, right? So I'll give you the heads up right now that this is happening within 2 days of the Mercury station on August the 4th. So, this kind of makes sense that we would tend to keep going down into this middle part of August. So that's Alfie's program. Now I have a super biorhythm that I run. People have been asking me to do this, and I finally got it up for NVIDIA. And this shows NVIDIA hitting a major cycle peak here in early June and then heading down. And so this just shows it heading down all the way almost into 2026. So this is a broad-based cycle. There's more of these that we can look into, but this does suggest that NVIDIA is at some type of a cycle high. I mean, it doesn't, obviously it's not going to keep doing a straight line down. It can meander back, but the general path of this does suggest that NVIDIA has hit some type of a peak. And we can actually zoom back on this. I mean, when I optimize this, I think this one goes back 20 years on this super biorhythm. And you can see that these are the actual trades in the optimization. And then so this cycle, it's a sine wave type of a situation. But it tracks, as you can see, these are the trades since, this is going back since, the last 2020, since 2020. So you can see here it's at some type of a high. And so it's suggesting that we will come down for the next year or so. At least that's what that system suggests. So getting back to S&P here, this is an intraday picture of S&P. And I like to plot the geomagnetic storms on here so we can kind of see the effects of it. So we had a G2 storm recently here. And then if it goes to how they say, if the G3 storm does come, we will have a G3 storm coming tonight. If that actually hasn't happened yet. But if it does happen, we will have that. But we do have these series of other storms coming across the market in the next 2 or 3 days. So like I said, this is, at least in the near term, this is showing more bearish conditions on the market. It doesn't mean the market can't go up. It just means that on average, that's what tends to happen per the report of the Federal Reserve of Atlanta. This is the research that they did on this storm. I got one more Fed picture here to show you guys. This is the Fed internals. So the Fed did show a change of character here on the markets. They had this first push up here at the end of March, April, and then they pulled back. And then you can see they're starting a new push higher here. So overall, even though the Fed use isn't a sell, it is in this near-term down cycle, there is a change of character from the Fed here to try to lend more support to this market. So just putting that in the background there. And we are in an election season, so there is a good chance that it will try to make some more pushes to the upside here. So that's the S&P in a summary, but I have some information on Bitcoin if you're interested. So what do you think?
Oh, yeah. And also, we got to cover gold, too. So let's do Bitcoin first, Mr. Trump's favorite, and then let's do gold. My favorite.
I don't have gold prepared, but I'll go through Bitcoin. I'll do the best I can with this.
Okay.
All right. So Bitcoin's been in this uptrend, this short-term uptrend. It will go into a sell on the 31st. But the one thing I want to point out is that the long-term super biorhythm is down. And so everybody got really excited at the beginning of the year on Bitcoin and saying it's going to go to whatever, 100,000, 200,000. And, this well,
Why am I laughing?
I'm going to point something out in a second. Okay, let me point something out in a second. But this biorhythm is showing Bitcoin to be heading down through 2024. However, because Bitcoin is such a wild card, I do want to point out we do have an election coming up. And these candidates have kind of aligned themselves. Trump has gone more into the pro-Bitcoin camp. And so one of the things that he said is, and I want everybody to pay attention to this because this is a big wild card. He did talk about Bitcoin being a reserve for the United States. So here's the thing. If there is any action like that by the United States, if they do start to hold any Bitcoin in reserve, that would cause the price of Bitcoin to skyrocket. Or in theory, it would. And so it's a real wild card here. I mean, I'm going to show you these super biorhythms here. This is the super biorhythm here that I've shown. This is the black one here. And the red one, this is kind of the medium term. We're kind of moving into a down phase here. However, again, with the election coming up, I do think that, we have to be aware that this can go very quickly the other way. Especially with something like Bitcoin. Now, I tend to think that, when we talk about, the whole thing about Bitcoin is the scarcity. Everyone says, oh, it's scarce and there's a fixed number, limited number of coins. Okay, that's fine. But when we talk about scarcity with something like gold, there's really not a substitute. I mean, there's silver, there's platinum. But when you talk about cryptos, in theory, like there's infinite replacements, right? I mean, in fact, they should be able to make a replacement that's better than Bitcoin. It's just Bitcoin is kind of the reserve cryptocurrency. So in the big picture, as long as it's the reserve currency, I still think it can hold some strength here. But I think it would take something like Trump to do that to make this really start to skyrocket here. So that's just, look, near term, I do think that this does have some near down-term potential. And I've been talking about this. I don't mean to throw, a wet blanket on everybody who likes Bitcoin, but because I'm not necessarily down on it, but the cycles do show, or the biorhythms do show that this will be heading down through 2025. But the election is here. into November, obviously early November, and you can see there is a little bit of a surge here or a low here in September, October, and then also in December. So, and then the long-term cycles are going to bottom right around February. So I just think that bears watching, just something to consider. So
okay, we'll be right back with thewolftrader.com. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back with thewolftrader.com. Please continue, my friend. Anything on gold that you could pull up for us? Because I've had several requests.
I don't have anything prepared today. I still have the Fed use in a sell on gold, but it's tricky to tell around these Fed meetings because, you know, we have the volatility around before and after the Fed meeting is it can go a few ways. But I can prepare something for the next time on gold. It is still pushing up into a cycle, some type of a near-term solar cycle. But the Fed use is still in a sell, so I'll get back to you on the gold. So, but one thing I would tell you is Fed use is still in a sell. Okay, so Bitcoin, just real quick on Bitcoin, just to finish up on this topic, the solar cycle is peaking on Bitcoin here, and then 731 is the sell on the quad lunar. So I would just tell people that, you know, based upon what I'm seeing with those longer term cycles, you know, I do think there's a chance this is going to keep chopping down, trying to head into that election. And like I said, it's going to depend a lot on what if Trump is reelected, if he is, and I do think this is going to be a close election. So it's too close to call right now. But if he is reelected, it could go positive. If Kamala Harris is elected, it could go the other way. So it's really this is the wild card of all wild cards here. But the solar pattern does peak now, and then it falls all the way into late September. That's a typical annual pattern on Bitcoin. So
this is great stuff. We've got just a few seconds left. Tell the folks how they can reach you. Do you still have your Sunday morning session that you usually do?
I do. We do 2 sessions. So the first one's on Saturday. We do a general webinar, and I talk about different topics. I mean, lately we've been talking about S&P. Sometimes we talk about psychology, just different things. That's a Saturday. That's on YouTube, and that's on Wolf Trader Futures YouTube. Anybody can show up to that. And then Sunday we have a Zoom session where we talk about our auto trading, which is our live trading accounts. We have the live managed accounts through auto trading, and we talk about that on Sunday. But that's a Zoom session, and that's also open to the public. Anybody can come, but it's just a Zoom. You can do private chats. So we'll see everybody there.
Thank you, my friends. Shane Smoley, wolftrader.com, folks. We'll be seeing you tomorrow. Our guest will be Stan Harley. So live every day in an attitude of gratitude, and may God bless.